Hi, I'm Tim, and thanks so much for watching my channel. I really appreciate it. This channel is about mortgages, it's about getting pre-approved, about credit, money, all kinds of stuff. So if you like those kind of topics, please hit that subscribe button. I love to have you as a subscriber. Also, drop me a comment. I love reading comments. On this video, I want to talk to you about the FHA mortgage. What is a FHA mortgage? A FHA mortgage is basically a government-backed loan. So it's backed up by the government. And what I like about FHA mortgage is that it has lower credit standards. So you can get a FHA mortgage with 500 or above credit. So 500 or above. Now there is a caveat. You don't want to have a 500 credit. If you have a 500 credit, there are some rules, like you can't have any collections or judgments or liens, things like that. And a lot of time, one of those things like a collection is what's draining your credit to be 500. But most lenders will give you an FHA mortgage if you have a 580, a 620, something like that, or higher. But generally speaking, anything under maybe 660, and you're looking to purchase or refinance with a 660 or lower, you're probably going to go FHA. And that's the great part about FHA, is that you could use that to get the house or to refinance. But I don't think a FHA is a forever loan. A FHA is a good loan to use if you have any things, or you just don't have the greatest credit or the greatest income or anything like that. You get a FHA. You fix those things and you eventually can refinance. But FHA is a great loan for first-time home buyers. I do a lot of FHA mortgages. I'm very experienced with FHA. And the FHA mortgage allows you to put only 3.5% down. So you only need 3.5% down to get a home. So 3% and 3.5% is not very much down, opposed to some other loan programs. And it's good to have a good loan officer that's local, someone that you can trust to recommend the different products based on your situation. Also, I like about FHA is that they have a 30-year, 25-year, 20-year. They got all the different terms. So FHA has all the different terms. The only downside to FHA mortgages is that they do have something called mortgage insurance, or MIP. A lot of people don't know that initially when they get the FHA mortgage, and then a couple of years later they start looking at their mortgage statement and they realize that their home went up in value. So with the FHA, if you didn't put at least 10% down, that mortgage insurance could be on your loan for the life of the loan. So with the FHA mortgage, that's one downside, the mortgage insurance. So if you buy the home with the FHA, you want to hopefully improve your credit and improve everything and then refinance out of it so you can lower your payment. So only downside FHA, it does allow you to get into a home at lower credit, but it has that mortgage insurance. Also, FHA allows your debt to income to be higher. So you can have a debt to income up to 55%. And that's really high. You don't want a debt to income at 55. Ideally, you want it under 45%. But FHA allows lower credit, higher debt to income, lower down payment. It makes it very, very easy for you to get into a home. And what I recommend is that you're looking to purchase or looking to do an FHA mortgage, it's good to talk to a loan officer probably 6 months before. So you talk to me or some other loan officer 6 months before. You just want to get everything squared away, because if you're a first-time home buyer, this is the first time you've done something like this. So it's good to get all your ducks in a row, have a really good game plan. And that way you can work on whatever you need to work on. If you don't need to work on anything, then you're good. You just wait until your lease is up, or you wait until you're ready to pull the trigger. So I like FHA. If you have questions about FHA, let me know and I'll answer that for you. But it's a great mortgage. It will get you in the home. It will help you not rent. Renting is terrible. I mean, I rented for 7 years. I wish I didn't, but I did. But get things in line. If you're going to pay rent anyway, you might as well pay yourself. And that's the biggest thing about a mortgage too, is that your balance goes down, down, down. And with rent, eventually you just keep paying rent until they tell you to leave, or they keep raising your rent. With a fixed rate and a fixed mortgage, it's not going to go up, so it's going to stay put. So that's all I have for you here. Thanks so much for watching, and I'll see you in the next video. Go ahead and like the channel. Go ahead and subscribe. Go ahead and comment. I'll see you later.